everyone. Welcome to Iris Carbon's webinar on ISSB and ESRS, an overview and digitization of ESG reporting. We have a couple of minutes left. We will be starting shortly. Clock has struck. We are into the webinar. Hello, everyone. I am Anushri, and welcome to Iris Carbon webinar on ISSB and ESRS overview and digitization of ESG reporting. To start with, let me introduce myself. I am Anushri, a chartered accountant, and I head customer success for Iris Carbon. Let me present my screen to you, and we will be shortly getting started. To begin with, Iris Business Services Limited, we operate in the UK under the trade name Phoenix Solutions. We have no affiliation with UK's Iris Software Group. So in the UK, we function under the name of Phoenix Solutions. Starting with our webinar topic today, before going into the deep dive of the webinar session, let me introduce you to our speakers today. We have with us Shambho Mitra. Shambho is the ESG expert, and he has a very rich experience working with Ernst & Young in the field of ESG under the domains of double materiality assessment, the risk assessment, helping the corporates designing their strategies and coming up with the ESG planning and standardization of the ESG reporting. That is Shambho, our subject matter expert for today as a speaker. Along with Shambho, we have Neha. Neha is our XBRL domain expert. 1 minute. I think my screen is not shared. Just a second. Sorry. So sorry for this. Yeah. So sorry for this. Along with Shambho, we have Neha. Neha is our XBRL and IXBRL domain expert. Neha will be speaking upon the digital part of the ESG reporting in later part of our webinar. She comes with a rich background of XBRL and IXBRL domain. She functions as a customer engagement manager across the globe for various compliance into the XBRL and IXBRL mandates. That's the introduction of our speakers today, Shambho and Neha. For those who have joined in just now, hello and welcome to Iris Carbon webinar. Before we go ahead, a few housekeeping announcements for everyone. I request everyone to be on mute, to turn off your cameras. The question and answers, please feel free to type in your questions in the question and answer chat box. We will be taking up the questions in the Q&A session. If any of the questions are left unanswered, you don't have to worry. We will surely get back to you. We have your email addresses. We will surely get in touch with you. We have an exciting segment in this webinar today, which is a poll segment. And I request all the attendees to kindly participate in the poll results. We'll be sharing immediately the results, and there will be interesting conversations around it as well. Just to keep the webinar interactive, I request everyone to participate in the same. I will now go ahead with few credentials of IRIS, our company. IRIS Business Services Limited. We are a 18+ year experienced company, more than 18+ years, definitely, in the XBRL and IXBRL domain in digital reporting. We are the RegTech company and listed on the stock exchanges, and we are functioning across 50 countries. So we have done this compliance across 50 countries with 30+ XBRL regulatories and across 6,000+ corporates. Position, as I said, ourselves as a RegTech company, and we're the only one from this RegTech segment to be listed on the stock exchanges. With the deep market expertise in the XBRL and IXBRL, we deal into the compliance and structured data reporting. To our credits, we have certain accolades and awards, too many actually, but here to name a few. Best FinTech 2021, Best MSME, that is the medium small enterprises tech 2022, and several awards to our credits. We are also engaged in developing and consulting for the taxonomy with a standard setter body for the ESG reporting purposes, and we are communicating and coordinating with them for the taxonomy building purposes as well. So that is introduction about ourselves. IRIS Business Services for you. IRIS Carbon is the flagship product of IRIS Business Services Limited. In the UK, we function under the name of Phoenix Solutions. With this introduction, some more aspects of IRIS Business Services. We function across 3 basic segments. These are collect, in which we mostly have the offerings for the regulators. So for the regulators, as I said, the taxonomy and the consulting. So building taxonomy, helping them in implementing the same, and consulting as well. In the create segment, we have the offerings for the enterprises, wherein they can go ahead and do the compliance-based filing from their side. IRIS Carbon is one such platform from the create segment. And consume whatever data is collected from the compliances. We leverage the data using the technology and draw interesting stakeholders reports and for important reports for the IR. That is about IRIS, and let me turn your attention to our select global clients, which are Colruyt Group from Belgium, Eni from Italy, Nordicon from Estonia, bpost, Gap Inc. Gap Inc. is US, and Petrol Slovenia, so on and so forth. These are just selected clientele of ours across the globe. And yes, that is all about IRIS Carbon, Phoenix Solutions. Coming to the topic of the webinar. Yes, it is the most talk about the topic, which is currently making lots of noise, is ESG, Environmental, Social, and Governance. Everyone knows that the CSRD is applicable, and there will be reporting soon coming into picture. With this, let me turn my screen to Shambho Mitra, our subject matter expert. He will be focusing upon various aspects of ESG, the applicability timelines, and many more things for the webinar to look forward. Thank you, everyone. That is the introduction. Over to you, Shambho.
Thank you so much, Anushri, for your kind introduction and also for introducing our viewers to IRIS and IRIS Carbon. So before we get into the meat of the matter, that is about ISSB and ESRS, I'd like to start off with the very basics about what exactly is ESG, how did it come about, why is it important for organizations, and that will lead us to why is ESG reporting important, and finally why ISSB and ESRS have come about before we go into the standards itself. So starting off with ESG, obviously everyone is aware it stands for Environment, Social, Governance. But what is it really? So in order to understand that, we need to understand the relationship between ESG and sustainability. I'm sure a lot of you might have this question, what is the difference between ESG and sustainability, or is it the same? Right? So this is just my take on it. There could be various different answers, but this is how I interpret it. Earlier, till about the 80s, 90s, sustainability of a company was mostly measured through finances. right? You look at the revenues, you look at the P&L, you do a fundamental analysis. Based on that, you determine whether I need to invest in this company or not. But slowly, investors started realizing that even companies which had great finances were still failing. So then the question came, what else determines a company's sustainability? And that is where ESG comes into the picture, wherein ESG together represent the non-financial aspects of determining whether a company is sustainable or not. So starting off with the environmental piece, there were two main triggers over here, one direct, one a little more indirect. The direct one is about resource availability. Again, earlier in the 80s, 90s, when globalization wasn't that prevalent, at that point, it was just local production. So people weren't that worried about whether my resources would run out. But then with globalization and when billions of people came into play, companies started realizing that, hey, the fuel that I'm using for my machines, it might actually run out. Or the other resources that I use, they might actually run out. Then what do I do? Right? So that's how companies realize that the resource availability, circularity, recycling is extremely important for companies. The other more indirect piece is, of course, climate change. Again, the movement pretty much started in the 90s when scientists discovered a hole in the ozone layer over Antarctica. But even at that point, it was more of, it's something that's happening in Antarctica. What's it got to do with us, right? So then the scientists started analyzing it more closely, and then people realized that the glaciers are actually melting at an alarming rate, and that spells doom for the entire world, right? So as a result of that, the COP was formed, the Conference of Parties, which is in its 28th year, and even in the most recent COPs, there were various island nations which came out and raised the issue that in a few years we might not even exist, right? So off late, most of the people are aware of the effects of climate change since these are pretty tangible. Like, you can see the effects of the cyclones, you can feel the heat waves, the cold waves, and so on. So that's when people realize that environment is a key piece for not just companies, of course, but for the sustainability of humans as a whole, right? So that's how the entire environmental piece fits in. Next up, coming to social, again, a couple of triggers over here. Firstly, the CSR, right? So I'm not going to name any companies which still exist throughout while giving examples over here. You might know of some companies which have depleted the entire groundwater in the communities around which they operate. Right? So in that case, what happened is the communities, they had strikes, they shut down the plants, and then companies realized that it's very important to have the social license to operate. And in order to get that, the companies will have to give back to the communities around which they operate. So that's where the CSR piece comes into, the sustainability of companies. And the next piece is human rights. Again, over here, there were various companies when people realized that there were human rights abuses throughout their supply chain. So they received a lot of negative attention. The stock prices fell down by quite a bit. So again, then the companies realized that there's also a social aspect of sustainability. Finally, coming to governance, over here, the major example, of course, I can take the name because it no longer exists, is Enron. Right? We all know how the major collapse, it led to billions of dollars of stock market prices just going down the drain. Right. So that is the major example. Apart from that, there was also the Dieselgate and, where there's a famous automobile company which hid the emissions within the cars. And there were various other scams as well. Right? So that's where the whole governance piece came into the picture, where people realized the business conduct, the ethics and accountability of a company is also an important factor. And so that is how ESG comes together to form the non-financial aspects of determining whether a company is sustainable or not. So with this in mind, coming to the next segment, wherein now that the investors and everyone around is aware how important the non-financial factors are for sustainability, that has resulted in a changing landscape. So imagine you're an investor, okay, and you have to invest, you have to choose between a company A and a company B, and they have very similar financials, right? They have similar revenues, similar P&Ls, and so on. But one company, say company A, it has lower emissions and it has minimal risk of human rights abuses in its supply chain. Whereas company B, its emissions are much higher, it has more human rights abuses. In that case, as an aware investor, I know that company A would be more sustainable and hence I would invest in company A rather than company B. Of course, not all investors would have the time to go through each and every ESG report. So an easy proxy for this is the credit ratings itself. Earlier, of course, it was purely financial terms, the credit ratings, AAA, AA, and so on. Whereas now there's ESG ratings, wherein companies such as MSCI, DJSI, CDP, and so on, they release their own ratings, which makes it much easier for companies. Again, if an investor has to choose between a company A, which has a DJSI score of 80, versus a company B, which has a DJSI score of 60, so it becomes very easy for them to choose that the one with the higher score. And finally, coming to the risk assessment itself, now that the investors are more aware of the risks of climate change. So if they have to choose between a company A, which is located near the shore, right? So for example, they are at a higher risk of the rising sea levels. They are more subject to tropical cyclones, whereas a company B, it's located somewhere inland. There's not much risk of the climate change effects taking place. And also the supply chain of company B is more risk-free compared to company A, then I will definitely go for company B as an investor rather than company A, right? So this is how the whole investor landscape is changing. And finally, coming to the companies themselves. Now, we have seen for altruistic reasons why companies should focus on ESG and also in terms of investors. But unless there was a financial benefit to the companies themselves, then so many companies wouldn't go for it, right? And research of late has shown that there is an actual financial benefit of companies doing ESG. Generally, companies who do ESG are as much either equal to or more likely to have better financial gains as well. So that's why there's an increased shareholder focus on it, and it is more likely to attract more investments as well. So with this, we have looked at why ESG has become increasingly important for companies. And since we know that it's pretty important, it's also important to report on it, because unless you report on the ESG itself, then the stakeholders concerned will never know, right, what you're doing. So the investors, shareholders, customers, they really won't know. So that's why it's very important to have ESG reports. So now I'll take a pause and I'll hand it over to Anushri for our first poll of the day.
Thank you, Shambhu, for this insight about ESG and the increasing impact of the ESG. It was really very interesting. For all the attendees, I now request you to kindly participate in the poll. For our first question, are you publishing your ESG reports? Poll will be right away in front of you. Thank you for participating. Here comes the next question, a very easy one. If you are publishing your ESG report, how and when do you publish it? Do you include it in your annual report? Do you prepare it separately and publish it along with the annual report as a separate report? Or you publish it totally separately as a part of your CSR and not with the annual report, completely separately, and it is not applicable? In the sense, you are not yet publishing your ESG report. You can take your time. Thank you for the participation in the poll. We will be keeping on buzzing in between just to keep the conversation on about the ESG and your steps towards the ESG reporting with the poll, just making it interesting. With the poll results, now I turn back to Shambhu to carry on with our next segment, ESG reporting for the beginners.
Thank you, Anushri, and thank you to all our participants for the poll. So very interesting results. Now that we have looked at what is ESG and why ESG reporting is important, the next thing we need to consider is why ISSB and ESRS have come about. And so that is the very next step. So I'm sure many of you might have heard the term of alphabet soup, especially those who are currently preparing the ESG reports, those who already have reports. You might have used some of these standards or frameworks that you see over here. The SDGs, the GRI, SASB, all of these you might have used in your reports. Right? And even those who have not yet published reports, for them as well, you might be aware of these standards. Now, just to arrive at why ISSB and ESRS have come about, again, taking an example of an investor. Imagine you're an investor. You have to choose between a company A that's located in Germany, which uses SASB, and a company B, which is located in Belgium, and that uses GRI, and a company C, which is located in Cyprus, and it uses something else. It uses CDP, TCFD, integrated reporting. Right? In that case, it becomes very difficult for you to choose between the companies simply because they're not very comparable. They could have completely different set of information. Even though some metrics could be similar, for example, company A could be reporting on water recycling, whereas company B might not, and you are actually interested in that metric. So in that case, it becomes difficult for you to decide. Now, there's another factor over here for the companies themselves. So imagine there's a company A which is in Germany, and it uses one particular methodology to calculate its GHG emissions, whereas company B uses a different set of methodology to calculate its GHG emissions. The company A has reported, say, 10 tons of CO2 emissions as their total emissions, whereas company B has reported that it's 100. Right? So as an investor, I would definitely be more interested in company A than company B. But in actuality, if both had used the same amount of emissions, the same methodology used for calculating emissions, then it's possible that company A could have reported, say, 120 instead of the 10 that it reported before. So that's why companies also realize that there is an extreme need for standardization, right? And both from an investor perspective as well as company perspective, when it became important, that has led to the recent surge in reporting regulations across the world, starting with ISSB and ESRS. ISSB, of course, has taken within itself the SASB, TCFD, and integrated reporting, whereas ESRS is very specifically applicable to the EU. GRI, of course, right from its inception about 25 years ago, its aim has been to provide a globally comparable set of standards, and thousands of companies already use it. So these three are now emerging as three of the primary ESG reporting standards. Now that we have seen why they've come about, we'll also look at what's going on around the world in terms of ESG reporting. Right, firstly, coming to the European Union itself. Right, so those of you who have joined us from the EU, you're already obviously aware that the ESRS has been published and it has been adopted by the European Commission. We are just waiting for the European Parliament and Council to approve it, to approve or reject it, and then based on that, it will be put into the law, right? And it's just right around the corner, especially for companies who are already publishing as per the NFRD. And for them, they are the first in-scope companies, and the data for that will be from 2024 onwards, which is just right around the corner. So it's highly recommended to start your processes, to have your technology, to have your data collection in place, right, as soon as possible. Then coming to the US SEC is developing the couple of rules, the climate disclosure rules and the human capital disclosure rules. It's prioritizing the climate disclosure rules, which will be published shortly. And of course, just yesterday, the California government has passed its own climate disclosure rules, which will require value chain emissions as well. That's an important step. Now we'll have to wait for the US SEC also to come back on this. Coming to the UK already requires large listed companies to publish as per the TCFD's recommendations. And currently, now that TCFD has been absorbed into ISSB, they're also strongly considering developing a set of standards, the sustainability disclosure standards, which will be based on ISSB. So only where there are contextual differences, in those cases, there might be modifications or additions to the requirements of ISSB, otherwise it will be mostly the same. So I hope this gives the viewers a better understanding of what are the standards that they will need to apply. So now that we know what is going on around the world, we'll get to the main meat of the matter, the ESRS standards overview. But before this, I believe, do we have another poll over here, or it's after the
Yes.
after this?
No, we do have another poll over here, but I would like you to go ahead with the standards overview, and then we can have it.
Okay. So starting off with the ESRS standards, of course, as I mentioned before, it has been released on 31st of July 2023, when the European Commission has adopted it, and now we are waiting for it to be published in the official journal. And it was released by EFRAG, of course, and it's a direct result of the CSRD, which you can say kind of resulted from the European Green Deal as well. In terms of the effective dates as well as the applicability criteria, it's slightly complex in nature. So in case you have any doubts, even post my explanation, please do feel free to reach out, especially some of the terms which I use could be a bit confusing. So you can please feel free to reach out. Firstly, coming to the effective dates, as I mentioned, for companies who are already reporting as per NFRD, and especially this includes large listed companies. For you, it would start from 1 January 2024, the data, and the reporting would be in 2025. For the other large undertakings, which are not currently subject to NFRD, it's from 1 January 2025 data, and the reporting would be in 2026. For the listed SMEs, the applicable date is 1 January 2026 for reporting in 2027. And this also includes non-EU listed SMEs. What I mean by non-EU listed SMEs is where the parents are located somewhere else, but they have a subsidiary within the EU, and this subsidiary is listed on a regulatory market, and it is an SME. So in that case, they will again fall under the same criteria. They'll have to report in 2027 on the 2026 data. Finally, coming to other non-EU undertakings, the effective date is 1 January 2028. There's the fairly complex set of criteria again to determine which of these will, which of the non-EU undertakings qualify in this, wherein we'll be looking at the revenues, more than 150 million euros in revenues within the EU, and if any of their subsidiaries qualify as large undertakings, or if they have listed SMEs and so on. Now, coming to the applicability, I've covered a large part of it while talking about the effective dates itself, but just to summarize, it's applicable for all the large undertakings, whether listed or not, and it also includes non-EU parent subsidiaries. In the case of non-EU, again, I feel it's important to mention that ESRS will also be developing a separate set of standards, and they will also they could also determine that an equivalent set of standards is ordered. For example, they could determine that ISSB, if you apply, this is only specifically for non-EU undertakings, if you apply ISSB, then we are okay. But the guidance for that has not been released yet. We are still waiting for that. Apart from the large undertakings, there's also large credit institutions and insurance undertaking. In this case, the definition of large is the same as for large undertakings. Then SMEs, the non-EU undertakings, which are listed in a regulated market, and other non-EU large undertakings as well. So all of these will have to apply the ESRS. Now, the next question is, where do I start? Now, if I have to apply the ESRS, there has to be a starting point. And for that, ESRS prescribes the double materiality assessment, wherein you need to see both the impact as well as the financial materiality. What I mean by this is you need to see which are the topics, which are the important topics for you, and that will be determined using this. It's a fairly involved and a time-taking process. Again, if you need more details on this, please do feel free to reach out. And coming to the standards themselves, once you've done the double materiality assessment, you know which topics are important for you. So with that in mind, you know which of these topics to apply. So there are a couple of cross-cutting standards which will be applicable for all the companies across any sector, which is the ESRS 1 and 2. ESRS 1 is just general information. It's the approach to ESRS and how you do the double materiality assessment and so on. Whereas ESRS 2 has specific requirements. It asks about how the companies do a double materiality assessment, how have they done it, and also general information such as a number of employees and so on, which all the companies will have to do. Then coming to the topical standards, since you've done a double materiality assessment by this point, based on that, you know which topics to choose over here. Between E1 to E5, these are the environmental standards, S1 to S4 are the social standards, and G1 is the business conduct. And finally, coming to the transition provisions. So, of course, ESRS understands that a lot of companies may not have reported using ESG before. They may not have the required knowledge in place. So, based on that, they have provided a few transition provisions as listed over here. These are specifically for large undertakings. Apart from this, there are also specific transition provisions for undertakings with less than 750 employees. I won't be covering this in too much details. Again, if you want to know more details, you can feel free to reach out. So before going into the ISSB, just a couple of other things, a couple of other important points about ESRS is that firstly, they expect that your entire sustainability statement will be a part of your management report. right? That is one important point. Another important point is about assurance. Limited assurance will have to be done on the sustainability statement. So now moving on to ISSB. So ISSB again will follow the same key pointers. ISSB, just to start off, it stands for the International Sustainability Standards Board. It's a part of the IFRS Foundation, and their main objective is to provide a globally comparable set of standards specifically for investors, right? And they have released so far their S1 and S2 standards. It was issued on 26 June 2023, and it's effective from 1 January 2024 for reporting in 2025 onwards. Of course, this will be determined by the local security exchanges and the regulators who actually adopt these standards. Currently, the IOSCO, which is the Association of Security Exchanges, they have endorsed the ISSB standards. So we expect a lot of stock exchanges to go ahead with it. Next up, coming to where do we start? Right. Again, similar to the ESRS, this is an important question for those who will be applying ISSB for the first time. The starting point is different in this case, wherein over there it is double materiality assessment for ESRS, whereas for ISSB, you need to do a risk and opportunity assessment. This will be similar to the enterprise risk assessment that you do, except you will have to consider sustainability topics. And also, SASB publishes a list of material topics for each industry, and for each of those topics, there are certain metrics. So again, those will have to be taken into consideration while seeing what are the topics that you need to report on. Coming to the standards itself, so ISSB has currently released S1 and S2 standards, wherein S1 is just general requirements, and this includes information such as how the risk management has been done, and also again general information of the employees and so on. Apart from this, they have released one topical standard so far, the climate-related disclosures. This is very closely based on TCFD. It follows a lot of its recommendations. If any of our viewers currently do apply TCFD, you will know that there are 4 reporting areas: the governance, strategy, the risk management, and also the matrix and targets. So actually, even ESRS follows a similar format, except instead of the risk management, they call it risk, opportunity, and impact management. ISSB is currently also looking to release further topical standards. And in the case of ESRS, I missed mentioning earlier, but they will also be releasing sector-specific standards. Now, coming to the transition provisions, again, the ISSB has also provided a set of relaxations for companies who will be reporting for the first time. And these are the set of relaxations that you have over here. Again, for ISSB, they require that the sustainability statements are a part of the general purpose financial statements. But for the first year, there are certain relaxations as listed over here. Now, moving on to the interoperability. So this is particularly important in case you are already reporting as per GRI. Then you might have the question, do I have to completely overhaul my processes to report as per ESRS? So for that, there's good news. You do not have to completely overhaul your processes. EFRAG and the GRI, they have actually released a joint statement of interoperability, wherein they say that the definitions, concept, disclosures are very closely aligned, and the existing GRI reporters will be well prepared to report using ESRS, and entities reporting under ESRS are considered as reporting with reference to GRI standards. So all of this basically means that if you already use GRI currently, you don't have to worry too much. You are pretty well prepared to report as per ESRS. Now coming to another case wherein if you have to report as per ESRS, but you also have to report as per ISSB in some other jurisdiction, if you have different subsidiaries, and also the vice versa. So in that case, what do you do? Whereas the ESRS and GRI are very closely aligned, ISSB is slightly different because of its increased focus on investors. However, all of these 3 bodies are working very, very closely together to release guidance on it, and they will publish a sort of compatibility on all of this. So now I'll take a pause over here. Over to Anushri.
Thank you, Shambhu, for this detailed dive into the ESG topics plus the standards. So now we have got a hang of what standards should be adopted, how it should be adopted. And yes, starting it early will definitely make it easy and better for every organization going ahead. With the interoperability, it will be much easier for implementation for the organizations who already are publishing their ESG report. Keeping that thought alive, we are now into our next poll questions. Where are you in your ESG reporting journey in implementation of these standards? Are all set? You are in process, or you are yet to start? Request everyone to kindly participate in the poll to have exciting answers and discussions over it. To our next question, what framework will you be following for the upcoming ESG reporting? Will it be ISSB, ESRS, GRI, multiple frameworks, or you're not sure as of now? Thank you everyone for participation in the poll. Now we move to the next section. How to get started with ESG reporting, things to consider. This will be mainly focusing upon what are the things you need to consider while you will be starting with ESG reporting. Over to you, Shambhu.
Thank you again, Anushri, and thanks to the participants for participating in the poll. Some very interesting results, especially you see that the majority will be starting on the ESG reporting. So this next section is particularly relevant for anyone who is just starting on it, right? So these are just a set of pointers that we have put together. If you're just starting on ESG reporting, the very first thing that you need to do is reach out to your stakeholders. That's also part of the double materiality assessment for those who will have to report using ESRS. So just you can map their stakeholder expectations. You can see what are the topics that they think you should report on, and that will give you a fair idea of what you need to do. And the next step, you need to see what are the applicable standards. Currently, I can see there's still a lot of people who might not be sure of what are the applicable standards for you. So in this case, you are encouraged to understand or to reach out to the relevant experts to see which are the standards which are applicable for you. Once you know which are the standards which are applicable for you, you will see the data requirements, right, which each of the standards have, and then you will have a better idea of where you are in terms of reporting it. So based on that, you might need to align your processes in order to have the data available as per the standards. And once you've done that, then you'll go into the data collection process and you'll start your ESG report preparation. You'll be authoring it either manually or using software. Once you have drafts ready, then you will discuss with your C-suite. And especially this is relevant for disclosures on the matrix targets and this overall strategy. It's very important to get the sign-off on this from the C-suite. Once you have done this, the next step is about making it public, making your ESG disclosures known to all, as this is an important step in engaging with your stakeholders to see what they thought of the report. If they can suggest any improvements and so on, that will again lead you back to the first step for the next reporting cycle. So this is the overall process that we suggest. And after this, there are also certain things that you need to consider before even starting off on your ESG reporting process. Firstly, you need to have a very clear-cut ESG approach or a strategy in place. To do this, you need to assess where you are. You need to conduct a gap assessment or a current state assessment where you see what are your peers reporting on, what are they doing, and based on that, you'll have a better idea of maybe where you want to do, and you will want to set the goals as well accordingly. You'll have to decide which are the topics which are important for you, important focus areas for you in terms of ESG. And once you have those goals in place, you can have a team dedicated to achieving those goals. And you can also get your stakeholders on board to gauge their opinions on this. Once you've done that, then the next step is about seeing the resources you have in place for the ESG reporting. If you have a team internally, then well and good. If not, you can consult with any consultants or any of the experts. After that, you can start with the data collection process. You'll have to determine who will be the providers of data. Since you have the strategy in place, you'll know what are the topics, who's responsible. You can go to them to collect the data, and someone will have to consolidate it of course, based on the data requirements of the relevant standards for you. And then you'll have to, of course, author it using a platform. Either you do it manually or using some particular software. And the final step is the rolling out of the plan. Once you've rolled out the report, you will have a better idea of what are the things you can do in the next year to improve on what you've already disclosed on in the report. So you can go ahead with the measure, analyze, and the course correct sort of option. And regularly, you'll be tracking and monitoring your ESG goals and metrics. So this is the overall progress or the overall steps that you need to consider for ESG reporting. So that's it from my side. Thank you for listening. Over to Anushri for the next segment.
Thank you, Shambhu. Thank you for throwing light on the ESG and its aspects, the things to consider, and for the reporting purposes. I'm very sure this is extremely insightful just to me, like everyone who is attending this webinar. With holding on this thought, let us go ahead with the poll. The next poll, quick question. Do you have a designated ESG or sustainability reporting team in your organization? Yes or no? Interesting poll question. At what stage are you in the terms of your ESG rollout? You are devising ESG strategy for the organization. You are in the process of deciding upon the data points or the data reporting, data collection. You are sorted with the data collection and are focusing upon the ESG report preparation, and you are yet to start. The purpose of this poll is just to analyze the situation, like, organization, where are they, how are they going ahead with, so that it will give us more idea about our next webinars which will be coming up. So I request everyone to kindly participate in the poll. Last questions for Shambhu's segment here. How are you leveraging technology for the ESG process? You have a software for data collection. You have a software for ESG reporting. You have a software for ESG data collection and reporting. Or you do not have a software, but you have a team who is handling the ESG data collection, reporting, and everything for ESG. With that poll questions, we come to the end of Shambhu's segment, which was deep diving into ESG and its aspects. Now I turn your attention to the future, the digital reporting of the ESG data. This is one step ahead, wherein after publishing your ESG report in the PDF on your company's website, what is the next step? The most important compliance aspect in the digital format coming to you, brought in by Neha, our XBRL and IXBRL domain expert. Over to you, Neha.
Wow, Anushri, this poll results are really interesting. So thank you for setting up the context, and thank you, Shambhu, for giving such a useful and insightful information. And I'm sure many of us are now aware what is happening latest and how to get started. Now we will see the future, which is the digital reporting of ESG data. Currently, companies submit sustainability reports in PDF format. The disadvantage of PDF format is that information is locked, making it hard for the investors and analysts to both search and analyze information for decision making. Also, there are chances of reporting mistakes being present due to manual reporting process of reporting. You would never want an external person to spot an inconsistency or a mistake in your report. So now, what's the best way to solve this? The solution lies in digital reporting. Digital reporting refers to information being submitted in an electronic format, which makes it easier for everyone who uses data to both access information and also analyze information. Almost visualize digital data as a barcode, which we use in our day-to-day life, which has all the information which machines can read instantly. So now let's see how this digital transition actually happens. Coming to the next slide, the digital form of reporting is nothing but XBRL, that is Extensible Business Reporting Language. This is the language which machines can understand. And this reporting language has been around for around 20 years. It was introduced when the famous Enron scam happened in US way back, and which had a huge impact on the economy. And this is where regulators, technologists, and accountants came together, felt the need for reporting to be in a digital format so that they can access, analyze data quicker, faster, and in an efficient manner. XBRL is basically a royalty-free open source standard and managed by a consortium called XBRL International at a global level, and our geography-specific XBRL consortiums like XBRL Europe, XBRL UK, XBRL US, XBRL South Africa, and XBRL Italy. And this standard was basically started for financial reporting for corporates, banks, and mutual funds, and now evolving for non-financial reporting as well. It is widely adopted by over 100 regulators across 60 countries. Now let's understand why there is a need of digital reporting. Digital solutions empower investors to make smart decisions, investing in a company which is more sustainable. Digital reporting further brings in transparent, searchable information since every data point is mapped to electronic concepts. Further, there can be checks that can be introduced to make sure the data is accurate and consistent. This results in making the ESG data standardized, comparable for both companies and for the investor community. The benefits of digital reporting, coming to the next slide, is that your data will be highly searchable and discoverable for investors and analysts. I'll show you how with an example. I am proud to share that Iris Carbon, along with Gap Inc., the largest apparel and fashion brand in US, undertook the activity of converting PDF into the digital format on a voluntary basis. Gap used the ISSB taxonomy to tag the ESG report and host it on their corporate website. So this iXBRL previewer is the human readable form of XBRL where you can search for the information and see the electronic concept with its properties. So you can see here that we have searched for the emissions, and once clicked on the XBRL tag, it will take you to the exact location. And once you click to the values, you can see here in the properties, each and every details are visible. The XBRL tag, which is from ISSB taxonomy, the value, the unit, which is in tons, the scale, which are in actuals, and the period for which has been reported. So this is the beauty of digital reporting. And this is how you can improve your ESG reporting with the XBRL taxonomies, because the taxonomies are more structured and standardized as per the frameworks. With that, it facilitates peer benchmarking and comparisons for investors and analysts. I would also like to specially mention here that Marvin Smith, GAP's Director of ESG Reporting and Disclosure, mentioned in his press release that GAP Inc. choose to make digital reporting in XBRL to make its ESG report more accessible to various stakeholders. From the report's digital conversion, Smith said that the taxonomy structure encouraged GAP Inc. to present some of the sustainability data in more rigorous, nuanced manner to add value to investors and to make available in a useful, comparable, reliable, and most importantly, accessible manner. Not to forget to read more about Marvin's viewpoint from the below link of press release on Global Newswire. Coming to the next slide, we have 3 offerings for ESG. The collaborative SaaS platform for authoring ESG reports. This allows multiple teams across your organization to work on preparing reviewing and finalizing ESG reports in one centralized place. The second offering is digital transformation of ESG reports, converting your ESG reports into IXBRL format for better investor reach. And the third one is the data analytics platform that will enable your teams and your investors to compare and benchmark amongst industry peers. So that's it from my side, and I will end here just by saying that companies are already beginning to report in digital format and be an early adopter and make an impact on investors for making decisions. Be that early adopter and take advantage of the benefits of digital reporting. Now we will take the last poll of the webinar and then we will move to our question and answer section. Feel free to drop your questions and we will answer it right away. Over to you, Anushri.
Thank you, Neha. Thank you for this wonderful journey of digital aspect for the ESG reporting. Totally insightful. I can see actually when the data is collected, how can we go ahead and generate the peer-to-peer comparison with the help of IXBRL data. It will definitely help the comparison and will bring standardization to ESG data as well. Thank you so much for throwing light. And now with this, we come to the end of the ESG aspects from the digital point of view as well with the last poll. Do you compare your ESG matrices with peers in your industry? You fall into a particular industry sector. Do you compare your ESG standards or ESG metrics with your peers? Yes or no? Last question for today for the poll. It's an interesting one, which will be definitely helpful. Would you like to be an early adopter of digital reporting for your ESG report? Would you like to adopt the conversion into digital format? Yes or no? We come to the Q&A session. Neha and Shambhu, would you like to pick a few questions and answer to our attendees?
Sure. So I think the first question, this is probably from someone who's been reporting using IASB already. The question is, what is the relationship between IASB and the ISSB? So over here, the answer is pretty simple. They're both a part of the IFRS, of course. So they are very closely aligned. As I mentioned before, ISSB is mainly focused towards the investors itself. And they are a major stakeholder in also helping to prepare the entire ISSB standards. So that's why most of the principles, in many cases, some of the principles of the ISSB are also related to the IASB standards as well. They borrow from them only where there are differences, they are explicitly mentioned. So there you go. That was regarding the question about the relationship between IASB and the ISSB.
Thank you, Shambhu, for that answer. Can we go to the next question?
Yeah, let me take the next question.
Okay.
Yeah. What is auditor's role in ESG reporting? Very good question. And yes, auditors play a crucial role in ESG reporting and compliance. And their role involves accessing and verifying the accuracy, completeness, and reliability of ESG information, which is provided by companies. And these really will play an important role for the investors to while making decisions. So auditors will play a crucial role in the ESG reporting.
Thank you, Neha, and thank you, Shambhu, for taking up the questions. I would also like to see the other questions which are coming in. But before that, let me just put some light on the aspect of the audit purposes or audit from the ESG point of view. And with that, yes, definitely, ESG assurance is something which is coming into picture. Shambho did speak about it, and ESG assurance is something which is going to be definitely the new thing which organizations will have to look upon. That is, you will have to get your ESG reports also audited from the experts. As you know, some takeaways from Shambho and Neha's session, I would like to say that there are many aspects a company has to look into. Apart from having a separate team, you also need to be technologically sound enough. Go ahead with the proper appropriate framework, getting consultation from the subject matter expert. All these aspects are very important in the journey of ESG. If you are a company who are already publishing your CSR, corporate social responsibility report, or your ESG report, and you have already declared your sustainability development goals, you will have to coordinate along with the standards with the taxonomy. Why I'm saying this is because taxonomy, the digital reporting is something which is definitely going to come in. So whenever you go ahead and align your standards, taking into consideration the taxonomy, it will definitely give a better picture. This approach was also adopted by Gap Inc. Just the digitization or the digital report we shared with you a few minutes ago. They also, aligned their standards, or you can say they aligned the entire disclosure with the ISSB taxonomy, and they could get many more insights and analytics data which was available for analytical purposes from this kind of reporting. So ESG reporting, as we know, it is a new compliance which is coming in, but it will also benefit each and everyone with the clearer aspect, the green investing and the social welfare as well. Each of the standards, each of the frameworks, whatever you are going ahead with, do consult your consultant. You go ahead with your teams or the subject matters expert. A new skill set or the specialized skill set is something which will be definitely required if you are not currently publishing the same. With that thought, we have an exciting offer for all the attendees in the webinar, wherein we will share our platform in extending and converting your entire report into the digital format. We will be helping you with conversion of your format into IXBRL for your ESG report. This offer is exclusively only for the attendees of the webinar today. Please go ahead and take the chance, be an early adopter, thereby converting your ESG report into IXBRL. Special offer by Iris Carbon Finex Solutions. To avail the offer, please send an email to info@iriscarbon.com. I repeat, info@iriscarbon.com. The email ID is there on the screen. You can see it. info@iriscarbon.com. With that, I would like to say thank you for each and every attendee. Should you have any questions, should you have any queries regarding the ESG, the adoption of the ESG, or any aspect of the ESG reporting, digital or the normal, do get in touch with us. You can write to us at info@iriscarbon.com. We will surely get in touch with you. Stay tuned for the more series of webinars which we will be bringing in on the same topic, ESG. Do ping in your requirements, do ping in your interest subjects, and we will surely come up with the webinar on the same. We like to share information with you, and definitely this series will continue with more of it coming along. Thank you so much for today's time. Thank you for joining us. Thank you to the speakers, Shambho and Neha. Have a great evening ahead, everyone. Thank you so much.
Thank you, everyone.
Thank you.